People nowadays make trading so fucking confusing. Think about all the new terminology, all the new strategies, all those YouTube videos, new gurus, all those kind of things. There's so much new stuff in the space of trading. And the issue is when there's so many things like that, it's so hard to get a genuine, easy, simple to follow strategy. And one that will make you actually profitable, one that will make you actual money. And trust me, I've been there. I've gone through some of the weirdest, worst strategies from some of the worst mentors out there. It never worked. I only lost money and I needed a proper strategy. The strategy I'm going to show you today is probably the easiest strategy you've ever seen on this planet through trading, okay? It genuinely, I have never seen an easier strategy than this. So let me run you through it, okay? It takes like 15 minutes a day and I'm going to show you all the things you need to run this strategy yourself. All right, why this strategy actually works, okay? Number one, the rules are super simple, okay? There is barely any discretion needed, okay? It's completely mechanical. Number two, it's very beginner friendly, okay? You don't need to know like every single term under the trading space to actually start, okay? So you can do it as a complete beginner. It is repeatable, okay? A very repeatable process, super easy to follow, really nothing hard about it. And it is not time consuming, okay? You don't need to be spending more than even maybe 20 minutes a day on the charts to use this strategy, okay? So this is why it works. All right, here is a quick rundown of what you will actually be learning, okay? So trend, break of structure, fair value gaps, liquidity, and then entry, okay? These are literally the only things that you need. All right, trend. So you need to understand where price is actually going, okay? Where is price even moving towards? Are we trending up? Are we trending down, okay? Are we trending nowhere? All right, we don't know where trend is. These are pretty much the only three possibilities there are when it comes to trend, okay? So as we can see here in this example, we've got an uptrend or just a bullish trend, okay? Price is obviously moving its way up, okay? Simply put. Then we have our second scenario, which is down. Again, price is simply moving down, okay? When you check in the charts, the price is obviously moving down. It's bearish, okay? And then we have nowhere, okay? Where price is moving up and down and around, but it's staying within this pretty much this same box, okay? Another super easy way to tell with trend is honestly just look at where price started and where price is finished, okay? Has that gone up, all right? Same with this scenario here, down. Price starts and finish, has it gone down, okay? And then with nowhere, okay, price literally just goes right, okay? Doesn't go anywhere, doesn't go up, doesn't go down, okay? So that's price action going nowhere, right? And honestly, quick tip, always trade with the trend, okay? This is going to make your life a whole lot easier. You're going to be winning more trades. So it's always easier to just trade with the trend. All right, I've got a real life scenario here. So we can see here, we have trend moving obviously upwards, okay? It's moving obviously bullish, okay? We can see that if we put our start point here and then pretty much our end point just right here, we can see that price is overall moving upwards, okay? So in this scenario, we can determine that price is bullish, okay? Price is moving upwards. Breaks of structure. You need to look at market structure, okay? Is price moving up? Is price moving down? What swing points is it actually breaking, okay? Where are the breaks occurring? What major swing points are we breaking, okay? And a quick tip here, try to take only major swing points, okay? Not so much minor ones, because there are points where you have price like this, okay? You got to understand here, what are the major swing points? These are the major swing points, okay? You can, of course, look at these points here, okay? But they're very minor, okay? It is a lot easier to just stick with the major swing points, all right? So yeah, try and take only the major swing points. All right, in this same scenario we've got, okay, so what we're going to do is we're going to mark out our structure, okay? So our major swing points, all right? And then from here, we can determine where the breaks of structures actually are occurring. So we can see here, we've got a break structure, okay? As price moves up to this point here, price is down here and then back up here, okay? Another break of structure here, okay? Let's move forward a little bit as well. We've got another point here, yeah, and then this is major enough for me. And then till we get to this major point here, okay? So we can see price is breaking from this point here, all right? And as price moves up and down, price doesn't actually break through here. So you know what we'll do? We'll actually remove this because this is a bit more internal, but you can really decide either way. Price breaks up here and then to this swing point here, okay? So that's the difference between internal and external, okay? This right here, it's a bit more internal stuff, okay? While in the bigger picture, these are the bigger swing points, okay? These are the bigger and major swing points that are being broken, okay? Which means that these are the major breaks of structure, okay? So we have our market trends, and then we have our breaks of structure and where price is moving, okay? So that's breaks of structure done. Fair value gaps, what are they? All right, so fair value gaps is an imbalance in the market where price moves so aggressively that it leaves behind inefficient pricing, okay? They may sound complicated, but in simple terms, it's when price just moves aggressively, okay? And we can see it evident in the charts, all right? So how does it form? Strong impulsive move, very little trading in the middle, price leaves an imbalance, and then the market often revisits this area, okay, which comes back down to the strategy, which I'll show you later on. So in the charts here, we can see here at this point from these two candles, okay, so from you always need 3 candles, all right? So it's this candle's highest point, okay, and then this candle's lowest point, okay? That is the gap here, all right? This right here is the fair value gap, okay, or the imbalance, all right? That's the imbalance created, okay? It can be the same when price is moving down, all right? But you pretty much just need this big fat block here from the highest or lowest point, whichever way, because if price is moving down like this, right? Then let's just say the candles here. This is also an imbalance, all right? Because we can see here, the lowest point here, and then the highest point here is the fair value gap here, okay? But this is a cleaner example right here, where it's literally just this point here, and then that's our fair value gap, okay? This is our fair value gap. This is our imbalance because we can see that there's been a strong push, okay, where prices just moved so quickly in one direction where it's just left an imbalance, right? So that is imbalance slash fair value gaps. All right, so I've got the same example here. What I'm going to do is I'm going to use this rectangle tool. I'm going to mark out where these fair value gaps actually are, okay? So you can see if we zoom in even further, there are multiple fair value gaps within this one leg, okay? So you can see here, there's fair value gap here. You can see that it's here as well, and then that's pretty much it. Even consider this one here as well, all right? So these are all the fair value gaps that are within our leg of price action, okay? Within this leg of price action. So you can see we've got 1, 2, 3, 4, 5 different fair value gaps, okay? Which shows that there's been impulsive movement to this upside, okay? We can see that impulsively, okay, even price had left these areas very impulsively and very quickly to the upside, okay? So that is where fair value gaps and imbalance comes into the picture. Liquidity sweeps, what are they? So liquidity is where traders place their stop losses and their breakout orders, or pretty much where there is just orders resting in the market, okay? The market is naturally drawn to these areas. The price action needs fuel to be moving, okay? And that fuel is the orders, all right? The fuel is the stop losses, those kind of things that are actually moving the market, all right? So where is liquidity found? Previous highs, previous lows, equal highs, equals lows, and then even trendline highs and lows, okay? These are pretty much the most simple places to find liquidity. There are more places, but these are the simplest ones, okay? These are the ones you'll probably be using the most, all right? So in this scenario here, we can see, so right here is a bit of liquidity, okay? Because this is a low, okay? Previous low. Another piece of liquidity here, okay? Previous high. Another one, previous low, previous high. We can see here, these are equal lows, all right? And then here, these are equal highs, and then price continues moving up, right? So everywhere where this is marked, there is technically liquidity, all right? And price is drawn to these areas, all right? So when price is moving, price could be moving like this, okay? It's drawn to this strong area of liquidity. It grabs that fuel that it needs, and then it shoots up in its intended direction, okay? That's how it works, all right? It's the same here. Like, so prices, there's a bit of liquidity here, prices come up and shoots down in the other direction, okay? The intended direction. Liquidity, it's a very complex term to understand, but it's probably one of the most important ones that you need to know. So these are pretty much the most simple places where you can be finding liquidity, okay? All right, I've got the same trade example here. So what I'm gonna do is I'm gonna mark out our liquidity points, all right? So this is a high, sorry, this is a high, this is a low. And then we have a bit of equal highs here, and then even a bit of equal lows here. We have another small low, another smaller high, okay? Then another low here, all right? So these are pretty much our like places where there is resting liquidity, okay? So it's this point, these points here, these points here, okay? This little box of consolidation, all right? So we can go highs and lows. And then a little high, a little low here, and then a more major low, and then on you go. Okay, you can mark out even more points here. All right, so that is where liquidity is found on the charts. All right, now you need your entry. Okay, so where are you actually entering from? All right, so we enter at the 0.75 Fibonacci level. That's all there is to it. Okay, you mark out the major swing points here and here. Okay, and then the 0.75, which is this level. All right, so you drag your fib from this point down to this point. Okay, which gives you this 0.75 level, and this is exactly where we place our order, okay? At this line here, this is where our stop loss is, and then this is where our take profit is, okay? We don't really place it like in a specific area or a specific fair value gap or a specific order block, those kind of things. I honestly just keep it super simple, okay? And enter in at that 0.75 fib level. Okay, so if I was to enter with the 0.75 on our example here, what I'll do is I click on my fib tool. I'd mark out from our low to our high, or our two major swing points. And then we can see here that this is our 0.75 fib level, okay? These are some other levels that I have, but this one here is the 0.75 fib level. So this is where we'll be entering in off from. All right, now that we have everything we need, what we're gonna do is we're gonna run through the whole checklist in this scenario and then see if our trade is a winning trade or not, okay? So first one is trend, okay? Is there a trend here? We can see that there's obviously a trend moving bullish, okay? And we're gonna take trades that follow this trend, okay? So number one, trend is confirmed, okay? We've got that down pat. Number two, we've got our breaks of structure, okay? So what we do is we mark out our structure, okay? These points here, and then we can see here we have a break of structure from this point here, okay? So this low, and then broke this previous high to make this new high, okay? So that's our break of structure. Then what we'll do is we'll add our fair value gaps, okay? So what we'll do is add them just like this, okay? So with these squares, you can see here fair value gap, another fair value gap, another fair value gap, very small one, fair value gap, and then that's pretty much it. There's one more here as well, okay? But this is evident that we can see that there's obviously some impulsive movement, so our fair value gaps have been added in. Then what we'll do is we'll add our liquidity sweep. So we can see here, not a very strong liquidity sweep, but from this previous like minor low, prices come down and then shot back up, used as fuel to pretty much move the market, okay, where price is meant to go. Now what we do from here is we enter in at our 0.75 fib level, okay? So what we'll do is place our fib from this major low to this major high. What we'll do is we place our buy order, okay? And we get tapped in at this 0.75 fib level, and then price hits our take profit within 4 days, okay? So within less than 5 trading days, okay, we hit our take profit, all right? If you're trading with a 50K account and you're risking 1%, so you're risking $500 per trade, this is a 1 to 3 trade, so you'll be making $1,500, okay? If you're risking 2%, you'll be making 3 grand on this trade here, okay? And what you pretty much do is you scan the pairs, okay? And on the 4-hour time frame, and you look for these opportunities, all right? This takes you 15 to 20 minutes a day, okay? It's really, the strategy is really as simple as that, okay? So it's a very easy strategy, very straightforward to understand, and honestly, one of the easiest strategies I've ever seen in my entire life of trading.